Crcl Internet Group, ticker CRCL, is down almost 80% from its all-time high. This is the company behind USDC, one of the biggest stablecoins in the world. So why is a stock that IPO'd with massive hype now trading near its 52-week lows? Let's break down the technicals, the fundamentals, and the news that's driving this sell-off. What's up, everyone? Welcome back to the channel. Today we're diving into CRCL, Crcl Internet Group, currently trading around $62, down about 1% on the day, but the real story is the bigger trend. This stock hit an all-time high near $299 back in June last year, and it's been a rough ride ever since. Let's get into why. So here's the headline that's rattling shareholders. Just this week, Crcl stock crashed 17% in a single session after Stripe, Visa, and BlackRock jointly launched what's being called OpenUSD, a rival stablecoin. Think about what that means. Crcl's entire business is built around USDC being the dominant, trusted stablecoin. Now you've got three massive trusted financial names, Stripe, Visa, and BlackRock, teaming up to compete directly in that exact space. That's not a small threat. That's a shot at the core of Crcl's moat. Following that news, Susquehanna initiated coverage on CRCL with a neutral rating, saying the valuation was already full. On the other hand, Clear Street came out and said they think this sell-off is overdone. So there's real disagreement on Wall Street right now about how serious this threat actually is. This isn't a one-off. Just days before, on June 30th, Crcl fell another 13.6% after a different rival stablecoin launched backed by big names. And Morgan Stanley reiterated a neutral stance on Crcl, citing this exact competition, with a price target around $106. Now, there was one piece of good news in the mix. Morgan Stanley also said it's very unlikely that Coinbase would voluntarily end its partnership with Crcl. That partnership is a key revenue relationship, so that's one risk that seems to be off the table, at least for now. But the bigger concern some analysts are raising is USDC's market cap growth has basically stalled over the past 6 months. In a stablecoin business, if you're not growing supply, you're not growing revenue. And that's a real fundamental worry, especially with a wave of new competitors entering the space. Let's look at the actual numbers. Crcl is still not profitable. Trailing 12-month EPS is negative 42 cents, and net income for the fiscal year came in at a loss of about $69.5 million. Revenue, though, is solid, $2.75 billion for the fiscal year. Their most recent quarter actually beat expectations. EPS came in at 47 cents versus a 27-cent estimate. So it's not all bad. Execution has been decent. It's really the competitive landscape that's spooking the market. And here's an interesting split. Wall Street's average 12-month price target is still around $130 to $138, which is more than double the current price. But the range is huge, from a low estimate around $55.65 up to a high near $243. That kind of spread tells you analysts are deeply divided on how this competitive threat plays out. Now let's talk technicals. Looking at the 4-hour chart, price has broken down through a change of character and a break of structure, both bearish signals. We've moved from the premium zone through equilibrium, and we're now sitting in the discount zone. The key level everyone's watching is that $50 zone. That's a major demand block on the chart. If that level holds, we could see a bounce. If it breaks, this could continue lower toward new lows. On the flip side, that $80 to $100 range, which used to be support, has now flipped into resistance. For the stock to reclaim any bullish structure, it likely needs to reclaim that zone first. So to sum it up, CRCL's drop isn't random. It's being driven by real, fundamental, competitive threats from Stripe, Visa, and BlackRock entering the stablecoin space, stalling USDC growth, and a technical structure that's clearly bearish right now. But there's also a wide range of analyst opinion, and some think this sell-off has gone too far. As always, this is not financial advice, just breaking down what's happening and why. Let me know in the comments what you think about CRCL at these levels. If you found this helpful, Smash that like button and subscribe for more stock breakdowns. See you in the next one.